What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm still in the 330. I got to work tomorrow, but I'll have a video saved for you guys for tomorrow. But I want to reveal to you a high-yield dividend stock I've been buying. You guys wanted me to do a review on it, and I absolutely love this one. There's recent news on a dividend hike. The revenue's strong. And I'm going to go over these guys because I have them in my M1 Finance dividend portfolio, and these guys excite me with the recent news. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. We're at 10,600 subscribers strong. You guys are amazing. Smash that like button. Let's check this stock out right now. And that dividend stock is Delek Logistics Partners LP. I'm already giving you a warning. The MLP, and those usually involve K1s. It has a dividend yield of 7.56, a PE ratio of 14.41, average volume 76.16K, market cap 2.28 billion US dollars. Year range is $39 to $64.47. Day range is $52.36 to $54.27, and its previous close was $54. So in the past 5 years, it's actually done very well against the S&P, which is one thing that's attractive for investors. So let's go over these guys as a company. Delek Logistics Partners is headquartered in Brentwood, Tennessee. They're a growth-oriented, publicly traded master limited partnership formed by Delek U.S. Holdings, DK, which is their Holdings DK, in 2012 to own and operate and acquire and construct crude oil and refined products, logistics, and marketing assets. A substantial majority of our existing assets are integral to the success of Delek's refining and marketing operations. They gather, transport, and store crude oil and market, distribute, transport, and store refined products in select regions of the U.S. and West Texas for Delek third parties, primarily to support Delek's refineries in Tyler, Texas, and El Dorado, and Arkansas. So look at a few things right here. So I'll go over the regional overview, but they have 850 miles of crude and product transportation pipelines, 700-mile crude oil gathering system, and they were funded in 2012 by Delek U.S. Holdings. So I'm going to go over their assets and operations. So the big thing about these companies that I invest in is strategic locations. So right here, you see just the way that everything is transported across the state of Texas, okay? And everything's big in Texas. Now, everybody wants to complain, oh, we're going to get rid of gas and oil and blah, 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 mostly oil. I find that hard to believe because a lot of the products that we use are oil-based stuff, including cosmetics, including things in the medical industry, and I don't see anything going away because competition, there's a big thing with hybrid cars, and overnight, people are not going to have electric cars. They're not very affordable. I mean, who can afford a $50,000 car? So the demand's going to be high. People just cannot afford it. I really believe, and again, this is not financial advice for entertainment purposes, only disclaimer in the description, that the hybrid cars are the way to go. And guess what? Oil and gas, don't forget diesel. I mean, there's a diesel shortage right now. So, this is not just going to happen overnight. This is going to take time, and there's still going to be competition with resources. That's how it always is. I mean, there's still people burning coal. There's still people using resources with, forms of energy. So I'm just trying to make it as simplified as can be. I'm just trying to be as straightforward as possible, and I could be completely wrong, but that's the way I see things. So this is why I invest in these guys. And here's their pipeline that they have right down here to Belmont. So I think that's, very attractive right here. And here's East Texas, just the whole geographic map of everything. Here's the El Dorado pipeline, and here's the Stella gathering system. So looking at this from a strategic standpoint, Texas is a big state. And guess what? Texas loves oil. That's just the big thing about these guys. You have a team called the Houston Oilers back in the day. So, this is something that is very attractive with the state of Texas and the way things are going. So, these guys are still strong. And there's a few things that I'll go over that really excite me as well with these guys. So I'm going to be right now long in these guys, there'd have to be a significant change, which would really surprise me or really turn me off. And I don't see that at all with these guys. I see these guys way better than Energy Transfer, and I'll even compare them energy revenue wise and dividend history wise with Energy Transfer. But let's go over their revenue real quick. So here's their revenue in millions US dollars. 2015 it was 589, 2016 448, 2017 538, 2018 657, 2019 a little bit down 583, then 2020 was 563, and then 2021 it was 700. There's a high demand with this company because you see the increase in revenue. I'll even go over their recent revenue. And just going over the most recent trend, the net profit margin was a little bit down, but the revenue was up and the net income was up. Net income was up 2.41%. The revenue was up 55.05%. So the quarterly statements that they made was 294.02 million. The net income was 44.67 million. Diluted EPS 1.03. Now net profit margin was a little bit down at 33.99%. Net profit margin was at 15.19%. Operating income was up 59.02. Net change in cash is a little bit down, but I'm not too concerned. I like the revenue increases, revenue trends, and demand of these guys. So I'll go over their dividend history. And I'm a big fan of high yield, high income dividend stocks. So I have a combination of those in my M1 Finance dividend portfolio. If you watched my previous video, I'll put it in the top right hand corner. Right after I do a video on these guys, I'll compare Energy Transfer's revenue and dividend history with these guys. But here's the thing. 2015, there was 57 cents, 2016, 59, 2016, 61, 263, 266 cents, 268 cents, 269 cents, 2017, 71 cents at 75 to 77, 79 cents, 2018, 2019, 81 cents, 82 cents, 85, then 88 cents to 89 cents. Then 2020 was 90 cents to 91 cents to 92 cents in 2021 to 94 cents. And then 2021 it was 95 cents, and then 2022 is 98 cents. And they made the recent announcement of hiking their dividend to 99 cents in 2022. The payout ratio is a little bit high. Number of dividend increases in the last 5 years is 20. Dividend growth in 5 years is 6.86%. So if you bought one share, you made $3.96 with a 7.56% dividend yield. So yes, the payout ratio is a little bit high, but there is a demand for these guys, and the revenue has gone up. So I'm going to continue to buy these guys and then see what happens. If there's a dividend cut, it is what it is, but I will take a risk with these guys. I like the high income, high yield dividend stocks. As long as they're in demand and the revenue's going up, I'm going to continue to buy these guys. So I'll compare them to Energy Transfer real quick, revenue and dividend history wise. So a few things with Energy Transfer, and these guys might be making a comeback. They could be. I mean, again, this is not financial advice. I'm just going over trends. 2015 revenue in millions US dollars, 36,000, 2016 31,000, 2017 40,000, 2018 54,000, 87, 2019 54,000, 213, 2020, look at that pandemic, ouch, 38,954, and a huge rebound in 2021, 67,417. So this is one that's on my radar. If I start seeing dividend hikes, Energy Transfer will be bought either on my E-Trade portfolio or my M1 Finance dividend portfolio, probably more E-Trade dividend portfolio. So I don't own this one, but I'm closely watching these guys because I was turned off by them in the past. Now I'm going to go over their dividend history. So here's Energy Transfer's dividend history. So 2018 and 2019, it was 31 cents. It was stagnant at 31 cents in 2020. Then you see the dividend cut. You can blame the pandemic. They dropped down to 15 cents. And now they're jumping up to 27 cents, 20 cents, 23 cents, 17 cents. So their payout ratio is 60%. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 14.33%. If you bought one share, you made 106 with an 8.58% dividend yield. So the price on these guys right now is $12.36. So one thing about these guys, sure, they're listed as the bottom 25%. These guys took a big hit. I'll probably do another review on Energy Transfer, but this is one on my watch list. So I'm going to keep an eye on these guys. If I see dividend hikes and an increase in revenue, I'm absolutely going to buy these guys. You can almost guarantee that. So again, this is not financial advice for entertainment purposes only. Disclaimer in the description. How do you like Energy Transfer versus Delek DKL is a dividend stock? So I will have a video tomorrow for you guys. I hope you enjoyed this video, and make sure you subscribe after you hit this notification bell. And make sure you subscribe and hit the notification bell after you watch this video, because I love pumping videos out for you guys. I will start doing reviews on dividend stocks that you guys requested for me. You guys take care and have a great Monday.